Welcome to the deep dive. Today, we're really getting into something interesting, the global gas engines market.
That's right, a really key sector.
Our mission really is to help you cut through the complex stuff, get the key takeaways from our source.
Which is the Global Gas Engines Market Outlook 2021-2033 from Cognitive Market Research.
Yeah,
Pretty comprehensive report.
exactly. So you walk away feeling genuinely well-informed on this, well, pretty dynamic industry.
Yeah.
Okay, let's unpack this.
All right, so diving right into those numbers from Cognitive Market Research, what really jumps out is the solid growth here. Globally, the market generated, let's see, about $4.45 billion back in 2021.
Okay, $4.45 billion.
And looking ahead, it's projected to climb over $5.26 billion by 2025.
Right, a decent jump.
And then a really big leap expected, hitting almost $7.36 billion by 2033. That gives us a CAGR, a compound annual growth rate, of just over 4.28%.
Wow, over 4%. That's substantial.
It is. And what's fascinating here, I think, is that this isn't just small steps. It points to gas engines playing a pretty significant role as the energy landscape keeps changing so fast.
Those global figures are certainly eye-opening. It's clear this market is, well, it's moving. So beyond just the size, what does this sustained growth suggest? I mean, what role are gas engines playing, especially when we break it down by region?
That's a crucial question, really. The consistent growth, it reflects a global need for power solutions that are flexible, reliable.
Flexible how?
Well, gas engines often have quick startup times, they're efficient, and they can run on different kinds of gas. So that makes them ideal for, industrial power, but also backing up renewables where power might be intermittent.
Ah, okay. Like filling the VAPs.
Exactly. That versatility explains a lot of the market's strength.
That makes a lot of sense. So where should we begin this regional journey? Which part of the world is really, leading the charge?
Let's start with North America. It's traditionally been a powerhouse, and it's still showing really strong growth. This region alone brought in revenues of nearly $1.9 billion in 2021.
Almost $1.9 billion, yeah.
Right. Climbing to over $2.2 billion by 2025, and projected to reach a pretty substantial $2.99 billion in 2033.
And within North America, I'm guessing the U.S. is the big story.
No surprise there, yes. The United States accounted for roughly $1.46 billion of that in 2021.
Wow, the lion's share.
Definitely. And that's projected to hit over $2.28 billion by 2033.
What kind of applications are really driving that in a market like the U.S.? It feels quite mature already.
Is mature, but a lot of the growth is tied to industrial uses, especially oil and gas.
Okay.
And also demand for distributed power generation, generating power closer to where it's used. And CHP systems combine heat and power.
Right, CHP. Or you use the waste heat, too.
Exactly. Big efficiency gains there for businesses generating their own power.
Makes sense.
And beyond the U.S., Canada is also significant. Revenues moving from about $274 million in 2021, projected over $460 million by 2033. And Mexico, too, a notable player, projected to reach nearly $247 million by 2033. The gas infrastructure already in place in these countries really helps,
Yeah, that established infrastructure must be key. So it's clear North America, with that industrial base, it's holding strong. Now, here's where it gets really interesting, I think. Asia Pacific. We always hear about rapid expansion there. What's the story for gas engines?
It really is a growth story, no question. Asia Pacific stood at about $1.16 billion in 2021.
Okay, starting strong too.
Yeah. Expected to rise to over $1.4 billion in 2025, and then projected to hit a remarkable $2.12 billion by 2033.
Over $2 billion. What's fueling that?
Well, it's rapid industrialization, for one, increasing energy demand across the board. And many economies there are focused on improving energy access.
Right.
Gas engines offer that flexible and relatively cleaner option compared to some older fossil fuels for their growing energy needs.
That makes sense. So within APAC, China must be huge.
Absolutely. China was near $359 million in 2021, projected over $668 million by 2033. Big numbers.
Yeah. But you also mentioned India showing a really significant surge relative to where it started.
That's right. India's trajectory is quite striking, from about $127 million in 2021, projected to more than double, to over $260 million by 2033.
What's so unique about India's growth there?
A lot of it is tied to its rapid economic development, huge growth in manufacturing.
Which needs reliable power.
Exactly.
Yeah.
And gas engines are being used for captive power industries, generating their own power to avoid grid issues, which can sometimes be less stable there.
Got it. Captive power.
Yeah. But it's not just China and India. Japan shows robust growth, too, about $166 million in 21, climbing to over $278 million by 33.
Okay.
South Korea moved from nearly $99 million to over $167 million in that same time frame. Australia, over $87 million, reaching almost $144 million.
Wow, it's really widespread.
It is. Singapore even, from about $52 million to over $98 million. And then you have other significant contributors like Southeast Asia as a bloc, Taiwan, and the rest of APAC, all showing healthy, consistent growth, often driven by similar needs, reliable, maybe decentralized power.
That paints a really vivid picture. A lot happening across Asia-Pacific. Okay,
Yeah.
let's shift gears, maybe head westward to Europe. What's the narrative there, with their strong green policies and established grids?
Europe shows, I'd say, steady, measured growth, reflecting those mature economies and that focus on energy efficiency.
Right.
The market had about $854 million in 2021, moving to roughly $984 million in 2025, and projected over $1.32 billion by 2033.
So still growing well, but maybe a different dynamic.
A bit different, yeah. Here, gas engines are often really integral to those CHP systems we mentioned.
Combined heat and power again?
Yep, supporting things like district heating, industrial processes, and also providing backup or peaking power for grids that are integrating more renewables.
Ah, okay. So playing that support role for the grid transition.
That's a good way to put it.
And who are the key players in Europe driving that $1.3 billion projection?
Well, the UK is important, moving from about $140 million in 2021 to over $224 million projected by 2033.
Okay.
Germany, a real manufacturing engine, is even stronger. Roughly $155 million in 21, projected over $259 million.
All right. Germany makes sense.
France also contributes significantly, nearly $150 million projected. Italy, around $96.5 million in 21, growing to over $144 million.
Okay.
Spain shows solid growth, too, from about $65 million to over $104 million. Sweden, from about $57 million to over $90 million by 2033.
So the big economies are definitely involved.
They are. But we also see contributions from countries like Russia, though maybe slower growth projected there recently. Also Denmark, Switzerland, Luxembourg, all showing the incremental but consistent growth. It shows pretty broad demand across the continent.
It's really fascinating how the drivers seem to shift a bit region by region based on their own energy situations.
Exactly. It's not one size fits all.
So moving south now, what does this all mean for South America? A region we often think of with emerging markets developing infrastructure.
South America definitely represents significant emerging potential. The market moved from nearly $257 million in 2021 to about $320 million in 2025, and it's projected to reach over $457 million by 2033.
So steady upward trend there too. What's fueling it?
Largely industrialization, like in Asia Pacific, also new resource extraction projects, and expanding decentralized power where maybe the main grid is still developing.
Right, filling those infrastructure gaps again.
Precisely.
And who's leading the way in South America? Is there a clear frontrunner?
Brazil is the clear leader, yes. Started around $110 million in 2021, projected over $186 million by 2033.
Okay, Brazil. Makes sense with its size.
Yeah, it's industrial base, agriculture, creates a steady need for reliable power. But others are noteworthy too. Argentina, set to grow from about $57 million to over $102 million. Colombia, around $31 million, growing to over $50 million. Peru, about $17 million, reaching over $28 million. And Chile hit about $19 million, projected over $34 million. And the rest of South America also shows promise.
Okay, interesting. Now let's turn to the Middle East, a region just synonymous with energy resources, right? How does that play out in the gas engine market?
Absolutely. The Middle East saw about $147 million in 2021, growing to over $176 million in 2025, and projected over $251 million by 2033.
So solid growth there, too. Is it mainly tied to oil and gas itself?
It's often tied to the oil and gas sector, yes. Gas engines are used in various operations there, but also, significantly, for power generation to support rapidly growing cities and big industrial projects.
Ah, so both resource extraction and general economic development.
Exactly. And of course, the abundance of natural gas there makes these engines a very logical, efficient choice.
Makes perfect sense. So which countries are the key players driving that growth in the Middle East?
Saudi Arabia is a major contributor, about $44 million in 2021, projected over $76 million by 2033. Turkey is also strong, roughly $29.8 million in 21, growing to over $52 million. The UAE followed with about $18.8 million, projected over $35 million.
Right.
Egypt recorded about $25 million, increasing to over $41 million. And Qatar, with its huge gas reserves, was about $13.7 million in 21, expected over $22.6 million by 2033.
So quite a few key nations there.
Yes, and the rest of the Middle East adds to that with consistent growth, too.
Okay. And finally, let's wrap up the regional tour with Africa, often talked about for its untapped potential.
Yeah.
How's the gas engine market looking there?
Africa's total revenue grew from about $129 million in 2021 to over $161 million in 2025, and projected to reach almost $218 million in 2033.
So smaller in absolute dollars compared to, say, North America or Asia.
Smaller for now. But that growth represents really significant development. Think electrification projects, new industries, and crucially, providing reliable power in remote areas off the main grid.
Bridging that energy access gap you mentioned earlier.
Exactly. Gas engines can be vital for that.
And who are the leaders driving that growth on the continent?
Nigeria is definitely a key market. Started around $20 million in 2021, forecast to hit over $35 million by 2033.
With its gas reserves, that makes sense.
It does. And South Africa is also significant, about $44 million in 2021, growing to over $80 million, often driven by its mining and industrial sectors.
Okay.
And the rest of Africa, collectively, contributed over $64 million in 2021, projected over $102 million by 2033. So that shows the demand for reliable power is really widespread.
Okay, wow. We've covered a lot of ground there, region by region. So stepping back, what does this all mean for you, listening in, curious about these global market trends in energy? Our deep dive, it's really shown this consistent, pretty robust growth for gas engines globally, hasn't it? From that, what was it, $4.45 billion in 2021?
That's right.
Projected up to $7.36 billion by 2033. It's not just bigger numbers, is it? It feels like it reflects real shifts in how we meet energy demand.
Absolutely. And if we connect this to the bigger picture, you really see this interplay between the established markets like North America and Europe seeing steady growth, and then these rapidly emerging giants like Asia Pacific, plus, regions like South America, the Middle East, Africa, all showing compelling potential in their own ways. It really paints a dynamic picture.
Yeah.
Which it raises an important question for you to consider, maybe. Beyond just the numbers we've discussed, what underlying factors, economic, maybe policy choices, or new technologies, what do you think is uniquely shaping these different growth rates and market sizes we see in each region?
That's a great question. And perhaps building on that, as you reflect on these trends, maybe consider how this evolution of the gas engine market might influence wider energy infrastructure development, especially its role maybe in supporting the shift towards more sustainable sources. And where do you see the next big shifts happening in the global energy landscape? Lots to think about.
Definitely.
Thank you for joining us on this deep dive into the global gas engines market. Welcome to the Deep Dive. Today, we're plunging into a topic that's a real workhorse in the energy world. Often overlooked, maybe, but surprisingly dynamic, the gas engine market. For this deep dive, we've pulled some, really fascinating insights from Global Market Pulse, powered by Cognitive Market Research. Gives us a pretty clear lens into its current movements.
Exactly. And our mission today really is to uncover not just the obvious drivers and challenges, but also, the more nuanced shifts and the exciting future trajectory of this essential technology.
Okay.
We're looking at its surprising resilience, actually, and its evolving role within our rapidly transforming global energy landscape.
Okay, let's unpack this then. What exactly are the underlying currents fueling the steady growth? Where's this surprising strength coming from?
Well, the primary driver, unequivocally, is the increasing demand for the power generation sector, especially with this sort of quiet revolution happening in decentralized energy. Gas engines offer this incredible blend of flexible, efficient, and highly reliable electricity production. They're perfectly suited for microgrids, industrial self-generation, and particularly, in off-grid applications where extending the central grid just isn't feasible or cost-effective.
That makes a lot of sense. And what really stands out, I thought, from our sources is their sheer versatility. Like, we're not just talking natural gas here.
Well, okay,
They can adapt to run on biogas, even landfill gas. I mean, how much of a game changer is that multi-fuel capability in today's, sustainability-focused world? And what's the impact on emissions?
Oh, it's a huge strategic advantage. This multi-fuel flexibility lets operators tap into diverse, often local energy sources, which, enhances energy security and reduces waste. And when they run on renewable gases like biogas or displace older, less efficient generation. They can significantly cut overall greenhouse gas emissions. We're talking CO2, local pollutants, especially compared to traditional coal or even older diesel plants.
Hmm.
So this eco-efficiency is really key to their role in regions aiming for, well, greener, more independent energy portfolios.
That versatility definitely sounds like a winning hand. But, well, as always, the path to broader adoption isn't without its hurdles, is it?
No, you're right.
What are the biggest roadblocks highlighted in our sources? Where does it get tricky?
Yeah, a major concern that consistently comes up is the high initial capital investment required for gas engine systems, especially for the larger installations.
Okay.
And beyond those upfront costs, ongoing operational expenses, things like fuel procurement, specialized maintenance, needing skilled technical people.
Yeah.
That could also be pretty substantial. This can be a significant barrier, particularly in, say, price-sensitive developing markets.
And on the fuel side, you mentioned fuel procurement. You can't ignore the whole issue of natural gas availability and its pricing volatility, right?
Absolutely critical.
That must dramatically affect the total cost of ownership for operators. Are we seeing this slow down adoption in some places more than others?
Yeah, definitely. Regions that are heavily reliant on imported gas or those with less developed natural gas infrastructure, they face significant uncertainty because of those price swings. It makes long-term planning difficult and can certainly slow down investment compared to, say, areas with plenty domestic supply.
Right.
And there's another layer, too. While gas engines are cleaner than many alternatives, methane emissions, from natural gas extraction and transport, they remain a notable concern. This is a significant policy hurdle and a perception one, too, especially in markets with very strict environmental regulations, even with all the operational benefits of the engines themselves.
So, okay, despite these challenges, which are, pretty formidable, what exciting shifts and prominent trends are shaping the future here? What should we be looking out for?
Well, one key trend is the increased adoption of gas engines for both baseload and peak load power generation.
Interesting. Both.
Yeah. As countries increasingly focus on improving grid resilience, reducing reliance on just single centralized power sources, these engines are emerging as a highly reliable option. They offer consistent power supply, they can ramp up quickly, flexible output, all crucial for balancing grids, especially in remote or underserved areas.
And a really significant trend, almost counterintuitive maybe for some, is integrating them into hybrid systems, alongside renewables like solar and wind.
Exactly.
These hybrid setups sound brilliant. How do they actually enhance grid flexibility and overall efficiency, especially when the sun isn't shining or the wind isn't blowing?
Yeah, they're essentially acting as the intelligent backup, sort of the smart co-pilot for renewables.
Okay.
When the sun sets or the wind dies down, gas engines can quickly step in, provide stable power, ensuring continuous supply without relying solely on battery storage, which can get expensive at scale. Yeah. So this combination leads to much better overall energy efficiency and system reliability. It actually enables higher penetration of renewables into the grid.
That makes sense.
And what's truly fascinating here is the ongoing technological innovation. Manufacturers are developing far more efficient, cleaner gas engines. We're seeing advancements like lean burn combustion processes that reduces NOx emissions, advanced turbocharging systems that optimize performance even at partial loads.
Wow.
Even exhaust after-treatment technologies like selective catalytic reduction, they're getting more sophisticated, allowing these engines to meet ever stricter emission norms while, optimizing fuel use.
So, boiling it all down, what does this all mean? We've seen the gas engine market as well. It's on a steady growth path. A powerful niche player driven by its impressive flexibility and that crucial role in decentralized power. But it grapples with significant cost challenges and, let's be honest, legitimate environmental concerns, particularly around methane. Yet, innovation keeps pushing it forward.
Exactly. And if we connect this to the bigger picture, as the world leans further into decentralized energy systems, seeks enhanced grid resilience, how might these continuous technological advancements in gas engines redefine their indispensability? Or maybe even their orchestrating role, you could say, in a future energy mix that's increasingly dominated by renewables. It's a dynamic tension that's really worth watching.
Definitely something to keep an eye on. We hope you've enjoyed this deep dive into the gas engine market. Thanks for joining us.